Rainstar Capital Group. We're based here in Grand Rapids, Michigan. Our firm is a leading national debt advisory firm. We are spread out across the United States. We have just under 40 managing directors. All of our directors have anywhere from 10 to 40 plus years of experience, either in commercial banking, equipment financing, asset-based lending, or commercial real estate financing. And what we've built here at Rainstar is one of the leading lending platforms. So we have 250 registered lenders on our platform. We provide for our clients commercial real estate, corporate finance, small business, and equipment financing. In a nutshell, our lending platform finances clients from $10,000 to $100 million, and we have every credit box covered, and we have every interest rate box covered. And so we kind of joke that at Rainstar, there's never a dull day, because for one day we could be financing a client at $50,000, another day we could be doing a $30 million commercial real estate development. So as a firm, we really get applauded for our focuses kind of on two things. One is transparency, and then the second is education. So we've shot 300 educational webinars and videos that you can go check out all across the internet. And then second, we have our magazine, which is called Rainstar Capital Group's Ultimate Lending Guide. The magazine highlights for our clients all 250 plus lenders' products. And so the magazine's on our website, you can pass it around here, but we launched this magazine early last year and did just an awesome thing for our business. It streamlined it, because now it's not just us telling you, we have 250 lenders. Clients and partners can actually go into the magazine. We break down and kind of see trees every one of the lenders' profiles. Okay, so you can see who they are, what they do, what their products are, what their min and max deal sizes are, what their min and max rates are. And so, we've been a member of your organization for what's been, Brad, about 6 months now, right? And so love what you guys do. I've read about you guys for years. And one of the things that Brad and I have discussed is that a lot of what you guys see when you interact with the businesses here in the West Michigan market is that they have really two great needs, right? One is human capital, right? The ability to identify A-plus players and talent to go and help their organization grow. And then second is financing, right? Getting the corporation the working capital they need to be able to grow their business. So with our firm basically fills that gap in the marketplace, because if you look at the capital markets and the products that they have access to, essentially they can go to bank financing, right, which is what all the local banks fight over. But obviously, as everyone knows, when the lender goes to lend to a client, it's always based on the 3 C's, right? Cash flow, credit, and collateral. And if a client has had any sort of issues and they're not bankable, the question becomes, what are the different products on the market that they would qualify for? And so with our firm, like I mentioned, we focus heavily on transparency and then education. But then the third thing is we have built out streamlined processes that essentially help the client identify which product it is that they're going to be a best fit for. And then we have internally our own software that essentially matches the client based on their different variables. But what we've added to it, which really gives us a huge advantage, is our team of advisors. So Jason Pierce is our team leader here in Grand Rapids. We also have Sukuman Sadhu, who's tied up with one of our real estate clients right now. He wasn't able to make this meeting. He'll be probably following up with you so you can get introduced to you guys. But what I'm getting at is, for the business owner, the CEO, or the CFO, if they're going to find financing separate from a bank, the battle is they have to go out and do all the searching, right? They have to vet lenders, they have to figure out what the best option is. And so with us, we have all the lenders, and I'm going to kind of go through this presentation here in a second, but we break it down for the client so it's easy to understand and figure out which bucket that they're falling into. So our responsibility is to essentially walk them through that process, show them which lenders are available, walk them through what the cost structures are, the interest rates, the time it takes for funding, how that product works, right? How it helps their business grow. And then what we always do is we throw it back on the client's shoulders. We say to the CEO, the CFO, Mr. and Mrs. Client, what is that you would like to do? Which path would you like us to go down? Clients really appreciate that, because of the fact that they're in 100% control. Does that make sense? And they're making the best decision for their business. So if you could help me kind of go through this PowerPoint, So this is what's called our Strategic Partner Program PowerPoint. In it, we're going to go through and kind of highlight things about the company. But I really want to break down for you guys kind of the 4 areas that we finance clients in to help you understand what's a viable fit, what's a viable deal. Okay? And so that's a little bit about myself. You can click over. We kind of highlight a couple of these things. So like I mentioned, 250 registered lenders. We're financing on a monthly basis anywhere from 40 to 150 clients from across the United States, and so our volume just continues to grow. And then from a company perspective, like I mentioned, we're at this PowerPoint always says currently at 32 managing directors. I believe we're now up to 37, so we're very actively interviewing. If anyone knows any bankers here in town, we are looking to add someone local, so similar to that human capital problem that all other companies experience, we deal with that as well. So if you know of any good qualified candidates, feel free to send them our way. Feel free to click over. So again, who are our lenders? Our lenders are not high net worth individuals. Our lenders are all companies, right? Branded companies. Typically, all of our lenders have a minimum of 50 million of assets under management or more. And so the combination of the lenders are all either banks, hedge funds, private equity firms. We have all the equipment financing companies, specialty finance firms. On the real estate side, we have pension funds, agency lenders, insurance companies, bridge lenders. Then the final one is fintech lenders. Does everybody know what fintech means? Raise your hand if you know what fintech means. You do? You do? Okay. So fintech lending is very simply just marrying up lending with financing, right? And the beautiful thing about fintech lending is that we have the ability to finance clients in as fast as 4 hours. Okay. And so, and when I talk to a banker, I explain fintech lending. It's like way over their head because bankers are used to doing deals in like 2 to 4 weeks, right? And we can fund deals like tomorrow, all the way up to $2 million, which is crazy. And you might be like, well, how do you do that, right? Well, what these companies have developed is algorithms and software that have the ability to do full analysis, primarily of the cash flow of the business, so they can create predictive patterns. And that's why they're comfortable in studying that amount of liquidity. So fintech lending to us is completely where it's at. A lot of banks are getting into that. And to us, we love it because of the fact that we have the ability to take on a client, meet somebody brand new, and put $1 million in their pocket a couple of days later. So click over to the next slide, please. So along with that, I mentioned we have our magazine. It's getting passed around. It's also on our website. Again, the magazine is a huge deal. You can check it out on the capital markets section or on RainstarUltimateLendingGuide.com. The magazine is great just because it's kind of like a restaurant menu. You know what I mean? It shows everybody what's available. So I click over. Along with that, all the lenders that are on our magazine also on our site, so clients really appreciate that as well. Because again, we're breaking down all the interest rates, all the loan programs, all the details of all the lenders right on our site. It's very user-friendly. Go to the next slide, please. Some of the flagship programs that we have a no credit check credit line, which is very, very popular for businesses, especially folks that have bad credit. We also have a cash credit line that we can fund clients inside of 48 hours up to $250,000. On the equipment side, our no credit check, no income check equipment financing is very popular, especially for companies that have been hit. The deal sizes for that program are from $200,000 to $50 million. And obviously, if the lender is not going to underwrite their cash flow of their credit, not checking tax returns, not checking bank statements, obviously what they really care about is the collateral value of the equipment that goes with the lender debt. So that program is very popular. We do a lot of those deals. We have for our equipment funding, for our business loans, on the commercial real estate side, we do a lot of work with banks. One of our big programs is what we call lender recapitalization. So lender recapitalization is where every lender out there, doesn't matter if it's a bank or it could be a hard money lender, any lender out there, they all have a portfolio of loans. The portfolio of loans are either performing, the clients are paying on them perfectly, they're semi-performing where there's maybe been a default or so, or they're not performing, meaning they're in trouble and they're behind on payments, right? So because Rainstar has developed such a well-diversified platform, we're working with banks right now to come in, and even if they have loans that they've made that have been perfectly performing, The problem is, and we've been doing a lot of that right now in the first quarter, is the regulators are coming in, and if their portfolio is unbalanced, or if they've made too many loans to kind of higher risk industries, the banks want to get out of those loans, right? Even if they are performing. So the value proposition that Rainstar provides is that we have the ability to come in and essentially refinance out that client, get the bank 100% of their capital back. But then a lot of our lenders are non-bank lenders, and so what that means is the bank can keep all the depository relationship, treasury management services, and then also all the different other financial services. So banks are really loving our platform because at the end of the day, guys, what our platform does is it solves problems, right? And I've always had a phrase that different deals need different forms of capital. And so the battle when you work with other organizations that just do factoring, just do equipment, it's kind of like square peg round hole, right? If that deal does not match up to that lender, sometimes the lender will force feed the client into that product, but it's not the best fit for them. Whereas with us, we know all the products, and so we have the ability to identify which product that would be the best fit for them. So to continue on. So like I mentioned, we've also built out very streamlined processes. So this is an example of our working capital blueprints. I don't know who has that document, but yeah, right there. So not only do we have our general working capital blueprints, but we also have built out 20 industry-specific blueprints of the different profiles of companies that we deal with primarily. So manufacturing, distribution, logistics, e-commerce, kind of the main target niches. What's great is that we already know which products that those companies need based on the growth, based on what it is that they experience. Obviously, a manufacturing firm has heavy equipment needs, right? An e-commerce firm might need some office chairs, but they don't need heavy equipment, right? So if you kind of go through those slides, you'll see that we break out for them which products that they match up to in the capital markets, and then clients really like that because we're already showing them that roadmap, or showing them that path that they have to go down. So this is the example of the industry-specific blueprints. All these blueprints are on our website. We also have a printout of those over there, so you guys can spend some time after this checking them out. Keep going. So one of the examples that we give, right, is that each of our platforms has pros and cons, right? So a commercial real estate deal is not going to get funded in 48 hours, right? The fastest we can do a deal like that is like 7 days, right? So again, what our responsibility to the client is to help them understand which of the product lines that they're going to apply for, and help them understand what the time frames are, right? So that they know, they can best prepare for it. So, click over. So this is a breakdown. So what we're going to go through kind of briefly right now is a breakdown of each of the 4 platforms. And we're going to break down what the interest rate hierarchies are. And we're going to go through kind of what kills deals in that space. And we're going to walk through kind of what it is that we need to be able to help the client, to be able to process the request and get a match to our lender. So in the working capital space, the cheapest and lowest cost of debt, as everybody knows, is from banks, right? Banks are going to give capital in the 4 to 7% range. And they'll do deals, 25,000 up to 50, 100 million, obviously if you're doing larger companies. So after that, if a client has bank debt or they don't qualify for bank debt, that's where a lot of these fintech lenders have come into the marketplace and are providing capital. So fintech lenders, we have term loans that will go out from 10,000 to 5 million. Now, this is a very important thing, especially for a lot of clients that you guys are seeing. Let's say a client has a facility with Huntington, or West Michigan Community Bank, or Chase, or Bank of America here in town. What's really awesome is that we have second lien debt products that help companies that are in growth mode. So the battle when you get capital from a bank is the fact that banks have ceilings, right? And banks are conservative, right? So when you have a company going like this, they need that money, right? They need capital. They need capital for paying their labor. They need capital for purchasing inventory. They need capital to purchase materials, right? And when a client can't access that because they're tapping out their ABL facility or their revolving credit line from the bank, that's where some of these products are very, very powerful, okay? Now again, the cost structures on those are higher, right? They're gonna be higher than bank debt, but for a client that is in that growth mode, they're willing to pay it because without it, they can't secure the money that they need to be able to then fulfill that contract, right? So you guys deal with a lot of businesses, they're securing government contracts and the like, right? If you don't have the working capital to build the widget, right, or to pay the labor, right? You can't go to lock in that contract, right? So that's where we have different fintech lines of credit. We have different fintech term loans as well. And then after that, you have what's called advances, which are A paper, and then you have the B, C, and D advances. So the word advance in the capital markets is like a dirty word. Why? Because do you guys see the rates that those advance lenders charge in number 5? It is absolutely insane, right? Now, why would a company take a loan out for 80% interest? We are in good Dutch West Michigan. That is absolutely a foreign concept to everybody, right? Why would somebody do that, right? It's the difference between consumer and commercial financing, right? Everyone has been trained to not pay 18% on your credit cards, right, or on your car loans. But if you're a company and you're growing and that contract has, you know, whatever, 20% ROI, right, or it has a lot of profit in it, why are you complaining about paying 60% on money when you're going to clear this? Does that make sense? And so normally the reason clients would take that is because the ROI, or the return on investment that they're making, makes sense. One of the questions that we walk them through, especially if they're looking and they've tapped out some of the other lower cost options, they have to go to an advance, is listen, what is the ROI at the end of the day, or what is the pain that you're avoiding? So if I could put $500,000 in your account by tomorrow so that you don't miss payroll this Friday, is that worth it to you to pay higher rates, that you don't have to lay off your force or your workforce? Then that makes sense, right? But again, our goal is not to have people in 4 and 5. Our goal is to keep people in 1, 2, and 3 because, you know, I'm a good Dutchman too. We like to have our interest rate costs. So in our world, we don't deal a lot with startups. Ideally, we like to deal with companies doing at least $200,000 of annual revenue. Ideally, it really should be like $500,000 more, okay? And the nice thing in our world is credit scores, they matter, but they also don't. So we can help clients as low as 500 credit scores, which is really big deals. Sometimes business owners sacrifice their credit, you know, to be able to grow the business, and so we have lenders that get around that. So if you click over, great. So kind of what we need, right? All the working capital lenders, you know, cash flow is the number one thing that they care about from an underwriting perspective. So with that, the reason that we can't help a client kind of comes in from a lot of issues related to cash flow. So if the client doesn't have like a minimum of 5 monthly deposits, they won't qualify for a lot of the working capital products. Some of the other things is like they have too small of daily average cash balances. Ideally, they need to have like about 2,000 or so of cash holding in the account, because again, that's a big thing that the lenders are underwriting, making sure they have enough cash to repay the loan, right? So kind of some of the initial things that we would encourage you on. So we have, our entire platform is built off of referrals, right? So our 2 primary sources of business come from banks, and then second come from our fellow lenders. So the same lenders that we place business with, every lender has a problem basically, right? They have a box in the window, and if your deal is too small, too big, doesn't fit the credit box, they can't do that deal. Well, with Rainstar, we got 250 boxes, right? So a lot of our lenders are referring deals back that don't fit their box or their window, and that's just been a really, you know, very, very good synergistic relationship. So when we work with partners such as management consultants, CFO advisory firms, CPAs, bankers, attorneys, kind of what we try to get across is these power 7 questions are kind of what it is that we need to be able to figure out if we can help a client, okay? And so if you click over to the next slide, so kind of on the intake, again, we're looking for clients to do at least 10,000, or the request that they need to have is like 10,000 to 50 million. You know, again, if you see the credit scores, right, that kind of shows you which product that they're going to fall into, right? So clients that have 700 plus normally very easily qualify for bank debt, right? Clients that are in the 600s or 640 plus typically qualify for term loans, and then kind of 640 and below markets where you have to jump them into different, you know, advanced products. Okay, so let's and this is really big. Okay, this ratio right here. Working capital lenders typically only give loans 1 to 10% of gross annual sales, or 1 to 2 times monthly deposits. Okay, that is strictly against cash flow. That's not leaning against inventory, real estate, equipment, or accounts receivables. It's just strictly a cash flow solution. Okay, so really, really important ratio, because everybody wants $5 million, right? But if they're only doing $2 million in revenue, then they're not going to get $5 million. Okay, so let's keep going here. So this is the documentation that we need. We built out full submission portals, which we'll email out to all you guys to kind of break down, and clients really like this, by the way. We break down for them the exact product, then we break down for them the exact supporting documentation that we need to be able to identify which of our lenders would be a good fit. So, all right, let's click on over. Okay, so same thing with asset-based lending and factoring solutions. For clients that are B2B, they normally have outstanding accounts receivables, right? You guys deal a lot with manufacturing, a lot of clients in the B2B space, right? So the facilities that we have are what we call scale capital, right? So as that company locks in, sells their product, and they're waiting to get paid 30, 60, 90 days, we have all the traditional factoring, but we also have some really neat solutions, okay? So our biggest solution, and one of our big marketing themes this year, is fire your factoring firm, okay? Because with factoring, one of the battles is that when they advance the capital against the receivables, the client's debtors, the people that owe the client the money, they get notified. And the factoring company basically becomes like a bill collector, right? Because they advance money to the borrower, but they're waiting on the borrower's clients to pay them back. There's a whole host of communication issues, whole host of problems. Just think about it, right? If you're we have a lot of family businesses here in Grand Rapids, right? If you have a family business, you spent 20 years, building that relationship, all of a sudden have some New York City factoring firm come in and be rude, right? Well, one of the products that we have is from one of our fintech lenders, and they have a line of credit product that has rates from 8 to 20%, and the line of credit goes from $200,000 to $20 million. What's awesome about it is they've figured out a way to basically duplicate factoring, but it's a non-notification line, so that the client's client never know that the factoring firm's involved. And that's a big deal because sometimes when a client's client figures out that factoring's involved, they're kind of like, "Oh, are you okay? Is something wrong with your business, right? Why are you having to get financing, right?" When in all reality, most companies that are growing, they need more working capital, right? So with this, essentially the client never knows that the lender's involved. Does that make sense? So it's a huge deal. We're doing a ton of those deals right now. And we're actually taking clients that have existing factoring that are frustrated with the pain points I just described, or transferring over onto this line of credit product. The technology that this fintech lender has is absolutely amazing. It's like a outsourced virtual CFO platform, where essentially it helps all CFOs with their cash management positions. It's awesome. So anyway, you can kind of see some of the different advance rates. Obviously, in an ABL solution, the lenders are looking to lean against either inventory, the accounts receivables, obviously, or the equipment of the business. And so you can kind of see some of the different max advance rates. Again, when you look on there, a lot of banks won't go as high as some of the alternative lenders will. So again, it's a way for clients to access more working capital and to be able to grow their business. So you scroll over. So from a cost structure standpoint, you can kind of see all the different solutions. We also have purchase order financing, which is really popular as well. So you can kind of break down the different rates and sizes and such. Again, in ABL, credit scores are not required. Okay, why? Because they're underwriting the credit worthiness of the client's client, basically. Okay, so all right, let's scroll over. Let's keep going. So these are some of the deal killers, right? Obviously in AR, the big thing is the strength of the debtors, right? If you have AR that's outstanding from 60 or 90 days farther out, that's not as strong as a churn of 30 days or so. So those are kind of some of the the bigger things when it comes to ABL. Let's click through. You can kind of see the next slide will highlight the different documents or the Power 7 questions again to kind of break down. You can kind of see some of the min and max sizes that we look for when it comes to inventory or PO deals. Keep going through on the next slide. That breaks down all the documents that we need. The biggest thing obviously is the AR report. It's you can pull that in QuickBooks obviously. So click on over to the next slide. And so then we'll branch into commercial real estate. So in commercial real estate, we always break it down to what we call low interest rate debt, middle of the road debt, and then expensive or hard money basically. So picture low interest rate debt from your 4 to 7%. On our platform, we have all the banks, the SBA lenders. I'm sure you guys are very familiar with SBA loans, right? We also have non-bank SBA lenders, which have a little more flexibility and also some really unique value propositions to the client. And we also have the CMBS and agency lenders, which provide like your good 30-year, 30-year money as well. So from there, we go into kind of your Alt-A lenders. They do deals at the 7 to 9% range, right? And then from there, we go into what we call your cheap bridge money, which typically lenders will do deals from like 1 to 3 year terms, and their rates can be like 8 to 10%. And we have more expensive groups as well, 10% plus. Okay. So to click through commercial real estate. Again, these are kind of our power questions. Again, in commercial real estate, you'll deal with a lot of the dreamers, is what we call them, the people that think that they can get 100% financing out there because they watch some guru's infomercial. That doesn't always exist in the real capital markets. You have to have a down payment, right? So we tend to deal with some of those folks. But same thing, lack of borrower net worth comes into play. But one of the things I want to get across is compared to a bank, a lot of these other lenders, they'll favor, right, either the collateral position or the cash flow of the real estate. So the alternative capital markets just have a lot more flexibility when it comes to getting commercial real estate. Also, sometimes for commercial real estate, banks don't always like multifamily or investment properties. Also, sometimes banks don't like special use properties. We have like every property covered. So marinas, golf courses, pretty much any type of property, we've built a platform to have a lending solution for it.
Campgrounds?
What's up?
Campgrounds?
Yeah, campgrounds fall kind of under your RV parks, right? Mobile parks. So, yep. All right, let's keep going because I think we're going to watch your time here. So, again, when it comes to commercial real estate, you can break down. We don't do deals really below 100,000. Just so everyone's aware, we typically, in commercial real estate, we typically do deals like the 1 to 30 or $40 million range, right? We'll get larger deals every once in a while, but we don't really do like small deals. Then we can do investment real estate, but we're not licensed residential mortgage brokers, so we don't do like personal homes, right? It's got to be like a rental property or a fixed income. Okay. All right. Keep going through. So this breaks down the documentation that we need. Again, that's on our submission portal, which we'll email out to everybody so you guys can see that. So, and then finally, we have equipment. As everybody knows in this room, equipment is such a huge need for most businesses, right? They always need capital to pay their labor or to buy the equipment, the machinery, right, to be able to help build the product. We are very, very active in equipment. We do a lot of like what's called micro ticket equipment deals, so like deals $500,000 below. And we also have all the other larger, macro ticket equipment lenders that do deals $500,000 and up, basically. So again, when you look at the interest rate hierarchy for businesses that want to get capital, you can get bank debt, typically in the 5 to 8% range. We have some lenders that'll go down to 3 or 4 if it's like really AAA, really strong credit, but typically it's around the 5 to 8. And you have your Alt-A lenders. A lot of specialty finance firms will put capital out at kind of your 8 to 20%, and then obviously you have other different types of leases that can kind of climb if you're in more of a hard money situation. So with our platform, we kind of cover the whole gamut. So in equipment, again, most equipment lenders are, the things that'll kill the deals, right, are gonna obviously be too high of an LTV request, meaning if, let's say it's a trucking and transportation firm and the individual wants to buy a Peterbilt truck or, whatever it may be. Sometimes they don't have the requisite down payment, right, very similar to real estate, right? Sometimes as well, they have to have enough cash flow, right? Sometimes the borrower's net worth is a big deal. I know a lot of our trucking lenders, for example, like to know that if they're financing a truck operator, they like to know if they have a home, right? Because they don't want that truck being stolen, you know what I mean? So those are kind of, again, the 7 questions. And if you click over to the next slide, again, kind of what we're looking for. We do deals from 10,000 to 50 million in the equipment space. Again, the credit score is not as important. We can get around that. Obviously, cost structures will go up if you're dealing with someone with lesser credit. So, and typically, I would kind of divide, and you can kind of see it there on the bottom. I divide the equipment space into kind of 2 categories, right? Lenders that care about cash flow, and then lenders that are more collateral based, right? So normally the biggest thing that kills deals is the cash flow of the business, right? Because the lender's not comfortable with then be able to handle the debt service. But that's where you get into some of the different products like your no credit check, no income check equipment financing, where essentially those lenders will lend up to 80% of what's called forced liquidation value. So that's not the appraised value, it's the forced liquidation value. And again, think of it almost like a glorified pawn shop. In the event that business goes under, they're going to take that big piece of manufacturing, put it back, and as long as they lent here, the thing's worth here, they can sell it at the auction, they'll make a spread, and that's why they're comfortable in not underwriting the cash flow. So that product, no credit check, no income check equipment financing, is fantastic for startups. It's fantastic for companies coming out of bankruptcy or companies that have had negative cash flow. Okay? Because essentially allows them to leverage the hard asset, right, of the equipment to be able to get the liquidity that they need to grow their business. So keep going. So you can see that kind of breaks down the different documentation that we need. Again, we can fund equipment deals that are like $150,000 below in 4 hours. We like to do a lot of equipment deals. So those deals go fast. If you need an appraisal or if you need like a valuation expert to go visit the property or visit the piece of equipment, it's going to take 7 days, 2 weeks or so. Okay. All right, continuing on. So growing the partnership. Our goal is to be able to finance your clients, right? You can't finance your clients if we are presented with junk, right? Or clients that do not fit. So let me explain to you what we don't do, okay? Because a lot of what happens when people see Rainstar, they think that we're miracle workers because we have 250 lenders, deals from 10,000 to 100 million. The areas that we do not help companies with are startups. So any company that's doing 200,000 of revenue or below. Second, we don't help with any sort of equity requests, right? So on the business side, you have clients that need angel or venture capital, right? And on the real estate side, you have people that need the down payment money, right? We don't assist with that. We only help with the first lien or second lien, senior, junior debt positions, okay? Other areas that we do not really help with is somebody wants to build like a massive wind farm or solar farm, or if they've got like a gold mine or coal mining deal. We don't really get involved. We can do the equipment, for like mining, but essentially like project financing, you know what I mean? Somebody that needs it to like start, right? They don't have necessary work. That really is kind of more of your equity or your angel investor who's going to really give that capital, right? And then the final thing that we don't help with is what we call venture debt. Okay? Venture debt is essentially where the client wants above and beyond their cash flow and the existing asset value of their business, right? So you'll get a lot of companies in like tech, for example, or we also don't have lenders that lend against an IP, right? And so you'll get, well, our IP value is worth 20 million, but we have no revenue, and we're real confident. If you give us 10 million, we'll get our user base up. And, we'll do. You guys are laughing because you know this. Right?
Well, it's just that was our conversation, and then realize you're going to make fun of me.
Right. Exactly. No, that's right. So I want to be clear about that. We're not miracle workers. We don't wave our magic wand up there and just get all of our lenders to lend. Obviously, our lenders care about cash flow, credit, collateral, all things that all lenders look for. So in regards to how we can work together, again, this PowerPoint gives a really nice presentation on what to kind of stay away from, right? And kind of what to present to us. It also then shows you the exact process that we need to be able to effectively help that client. And so, if you could refer over the client to us, one of our managing directors will be able to walk them through what we call our debt discovery process. And again, if you look at like those blueprints right there, what's nice about our platform is we're not coming and just trying to help them with one product. We do a holistic look at their business to help them figure out where it is that they can access leverage at the lowest cost to then be able to help grow their business. So at Rainstar, we have a phrase. It's called "Make It Rain." I'm excited to make it rain for you guys. So, all right.
Thank you.
I'm talking too much. So.